Okay, so I mentioned a bit in the special taxes section about penalties, and that our tax system is pay as you go. So what are quarterly estimated taxes? Let me tell you guys. So again, we have the IRS and typically your state, if you have state income taxes, they want you to pay them 4 times a year. They don't want you to pay them once a year because they can't cash flow the government if they aren't getting money throughout the year. So when you are an employee and you're getting a paycheck and a W-2, you have it so easy, you guys. Your employer is pulling that money out of your paychecks and paying it to the government for you. So it makes your life super easy because you just have to remember to file your annual tax return and figure out if you had enough taken out of your paychecks or if you're going to get a refund or not. So that's how it works when you're employed. When you become self-employed, a business owner, it's now your responsibility to make sure that money that you owe to the IRS and to your state is getting paid to them every single quarter instead of once a year. So that's why when we go to file our annual tax return, if we end up owing them more than $1,000 to the IRS, they're gonna slap on a penalty and say, hey, you didn't pay us enough quarterly like you should have. So depending on your situation, now there is a caveat, and that is if you've never owed on your taxes before and the first year that you owe, they're not gonna put those penalties on because it's your first year and you're trying to figure out how much you're gonna owe. So there's always that grace year where it's hard to tell because you don't know, you're new to business. Once you've been operating your business a while and it's profitable, remember this is all based on profit. We pay taxes on the profit of our business plus whatever other income we have. So when your business starts to become profitable, you file your taxes that first year that you owe. That's the trigger that you need to start paying quarterly taxes. Otherwise, if you start in your first year and you're super profitable, you may want to start sending money in ahead of time in that first year, just to save yourself the headache of having to send so much money at tax time. So this breaks up what we owe to the IRS over the year. Now, the quarters, according to the IRS, are not true quarters. So you will send in payments, or the payments are due April 15th, June 15th, September 15th, and then January 15th. And now that might flex a little bit if the 15th falls on a weekend or a holiday, but so they're not true quarters, but they want to get their money into the system so that they can pay the government bills. So how do you figure out what your quarterly estimated taxes are? I'm going to include my guide here in the course, but there's kind of a couple different ways to come at paying quarterly taxes. One of them is to pay in 100% of whatever you owed the previous year. So as long as you pay in what you owed last year, even if you end up owing at tax time, they're like, okay, well, you just did better, so we're not going to charge you penalties. That method is helpful, especially once you've kind of established your business and your profit's not fluctuating massively. So if you kind of hit level, you're good, you're happy, then that's an easy way. The other way is to actually use some tax planning calculators to say, like, this is how much I've made this year. If you are married and you have a spouse that has a W-2 job, or maybe you have other sources of income, those calculators will help you actually figure out how much you will owe in taxes before the year ends. So I have some resources for you guys of some good free calculators, or you can meet with a tax advisor who can actually run numbers for you. So that is something that I offer during different parts of the year. So if you're interested in that, there'll be information about that in the resources. But that's what quarterly estimated taxes are. They're just prepaying what you're going to owe when you file your taxes.